investors will be happy to say goodbye to August, an incredibly volatile month for the stock market. John Bogle, the founder of the Vanguard Group, joins us now with his perspective. So, John, it has been quite a month. What's your take on how investors should react in the aftermath?
Well, first I'd like to make a distinction, Poppy, about the difference between an investor and a speculator. I mean, this kind of volatility in the market is entirely caused by speculators. People are trying to catch the latest wave of sentiment, the latest words of the Fed, the latest developments in Europe, the latest problems in Washington, and the latest economic data. And that has very little to do with a long-term economic plan. And so I'd say try and ignore the noise. The rule for most things in life is don't just stand there, do something. But in these kind of circumstances, and for the long-term investor, the rule should be don't do something, just stand there.
You said earlier this month, not long ago, that we are likely heading into a second recession for the United States, right? Or that we could be.
I think the chances are probably 50-50 at least, that we're going into a double dip.
Given that, how should investors react? I mean, should they get out now and sell at these levels if we are falling into another recession?
Well, I mean, I think you should invest for the long term. And if you're investing for a lifetime or for the next 15, 20 years, whatever it might be, in that period, looking ahead, there are going to be a certain number of recessions, a certain number of booms, a certain number of good times and some bad times. That's the way the markets are. And to try and get in at the bottom and out at the top is simply impossible for anybody. But it's a very good bet that stocks will do significantly better than bonds over the coming decade.